Crypto in 2025 Top 10 Trends Revolutionizing the Blockchain World. The cryptocurrency and blockchain landscape has evolved dramatically over the last decade, but 2025 marks a turning point where innovation, regulation, and real-world adoption converge. What once seemed experimental is now becoming foundational to global finance, digital identity, and enterprise technology. As blockchain matures, new trends are reshaping the way individuals, governments, and businesses interact with decentralized systems. Here are the top 10 trends revolutionizing the blockchain world in 2025. 1. Institutional adoption reaches new heights. By 2025, institutional investors, hedge funds, pension funds, banks, insurance companies have embraced digital assets as part of their core strategy. Unlike the cautious approach of years prior, institutions now view crypto as both a diversification tool and a hedge against macroeconomic uncertainty. Tokenized treasury bills, on-chain bonds, and regulated stablecoins have enabled institutions to access blockchain-based liquidity without exposing themselves to unnecessary volatility. More importantly, the entrance of traditional financial giants has legitimized crypto markets, boosted liquidity, and contributed to more sophisticated financial products such as crypto ETFs, futures, and structured products. This institutionalization is pushing the sector into a mature phase. 2. The rise of real-world asset RWA tokenization. One of the most transformative trends of 2025 is the tokenization of real-world assets, a process that brings traditional financial instruments onto blockchains. RWAs include treasury bonds, real estate shares, invoices, commodities, and even carbon credits. Tokenization offers transparency, instant settlement, fractional ownership, and global accessibility. Governments and enterprises have begun exploring blockchain-based registries for property, titles, and supply chain assets, reducing fraud and paperwork errors. Meanwhile, investors are diversifying portfolios with tokenized debt and equity instruments. RWAs are bridging traditional finance strategy with decentralized finance DeFi in a way that finally makes blockchain technology indispensable. 3. Rapid expansion of AI plus crypto integration. Artificial intelligence and blockchain have converged to form one of the most dynamic technological pairings of 2025. AI systems can now automate trading, optimize blockchain networks, detect fraud, and enable more personalized financial tools. One major development is the rise of AI-powered decentralized agents, autonomous smart contracts that make decisions and execute tasks across blockchain networks. AI also enhances blockchain scalability through predictive optimization. At the same time, blockchain provides AI with secure data ownership and verifiable computation, solving long-standing concerns about trust and transparency in machine learning. 4. Central bank digital currency CBDCs move into mainstream use. Over a dozen countries have launched or expanded their central bank digital currency CBDCs by 2025. 5. Layer 2 networks and modular blockchains dominate scaling. Scalability has always been a bottleneck for blockchain technology. In 2025, Layer 2 networks and modular blockchain architectures have become the industry standard, addressing congestion and high fees. Rollups, sidechains, and state channels allow thousands of transactions per second while maintaining decentralized security, modular blockchains, where execution, data, availability, and settlement are separate. Layers are enabling developers to build highly customizable chains. This shift has created a more efficient and interoperable blockchain ecosystem. As a result, users enjoy faster, cheaper transactions across DeFi, NFTs, gaming, and enterprise applications. 6. Regulation becomes clearer and more structured. Regulation has long been a sticking point in the crypto industry, but by 2025, many regions have adopted more comprehensive frameworks. Governments are distinguishing between utility tokens, securities, stablecoins, and commodities. Key regulatory themes include licensing for crypto exchanges and custodians, stablecoin reserve audits, tax clarity for staking, airdrops, and NFT sales, consumer protection mandates. Clear regulations increase investor confidence and encourage responsible innovation, while some critics argue that excessive oversight threatens decentralization. Many crypto businesses welcome regulatory clarity as a pathway to institutional adoption and mainstream trust. 7. A new era of decentralized finance, DeFi 3.0. DeFi in 2025 looks vastly different from its early days of yield farming and speculative liquidity mining. The next generation, often referred to as DeFi 3.0, focuses on sustainability, real-world utility, and improved security. Key innovations include on-chain credit scoring using decentralized identity, tokenized RWAs integrated into lending markets, insurance-backed DeFi protocols, modular risk frameworks for safer smart contracts. The merging of DeFi with traditional financial assets is creating a hybrid ecosystem where users can access the best of both worlds: transparency from blockchain and stability from regulated assets. 8. Web3 social media gains momentum. Web3 has introduced new models for social platforms where users own their data, identities, and content instead of selling user data to advertisers. Decentralized social networks reward creators directly through token incentives. 9. Gaming and metaverse projects mature. The blockchain gaming and metaverse boom of the early 2020s had its ups and downs, but by 2025 the industry has matured. Games now prioritize fun and playability over speculation. Assets are seamlessly integrated as NFTs, allowing players true ownership of skins, items, and characters. Metaverse platforms have moved beyond hype, finding practical uses in virtual workspaces, digital fashion and branding, education and training, simulations, virtual real estate, concerts, and immersive entertainment. As VR and AR technologies advance, the intersection with blockchain is enabling more immersive and decentralized digital environments. 10. Environmental and energy innovations transform crypto mining. Sustainable blockchain technology is one of the most important trends of 2025, with global pressure on energy consumption. Crypto miners and developers have adopted greener alternatives, Major improvements include shift to renewable powered, mining farms, carbon offset mechanisms, innovative cooling systems, energy efficient consensus, mechanisms like proof of stake. The year 2025 represents a pivotal moment for cryptocurrency and blockchain technology. The industry is transitioning from speculative enthusiasm to real-world utility, driven by institutional adoption, regulatory clarity, technological advances, and integration with AI and traditional finance. As these trends continue to evolve, they will shape the future of global finance, digital identity, and the broader digital economy.